Alright guys, Chapter 7, Fund Accounting, Audit, and Other Support Functions. This should be a fairly quick overview. We already talked about fund accounting before, so every investment manager must do some form of investment accounting. Why? Not understand it more? You mentioned a few minutes ago. Calculate the NAV. You need to calculate the NAV. So at least they're going to have to calculate the NAV. See what's in the portfolio, see what it's worth to come up with the NAV, right? One is to provide data for investment decisions, right? The other is to perform fund accounting in order to meet regulation requirements, right? Why else do we perform fund accounting? So we can get the NAV every day. Keeps a fund ledger and books of record. Fund accountants also produces reports that go to shareholders and regulators. Their main job, and this is going to be a future quiz question, right? Their main job is to calculate the NAV between 430 and 550. Okay. Anyone here do the reading on this chapter yet? No, I didn't think so. All right. Why? Why do they have to have it done by 550?
Market closes.
Market closes at 430.
Yeah, that's why the next day.
Why 550?
They can post it for the next day study with the new figures.
You're right, it has to do with posting. So this is becoming less and less the case. But traditionally, if you wanted it would be a big embarrassment for your firm if your price of your mutual fund didn't make it into the paper the next morning. And having everything done by 550 kind of goes in accordance with the timing of that in order to get it out to the media and published in the Wall Street Journal the next day, or the Boston Globe, whatever paper you're looking at for mutual funds, right? So you need to have that price out there. Otherwise, your price is going to be late, and it won't be in the traditional media forms that a lot of people look at. Okay. Fund accountants spend most of their day preparing to calculate the NAV. They start the day by reconciling the cash and security records by the custodian and the investment advisor, right? Now, could the custodian and investment advisor have different records?
No. Yes, maybe.
Let me give you an example of where it would be more common to see a discrepancy. Let's say the investment advisor sells a stock on the last day of the month, right? Now we know the custodian is the actual holder of the securities, right? In theory, right? What's the settlement process? Right? So the investment advisor could wipe that stock off their books on the last day of the month, right? And that's true. But because it takes 3 days to settle, the custodian might not see it until like the second business day or the third business day, causing a discrepancy. Now, one person's right, one person's wrong. Now, if the investment advisor did sell it on the last day of the month, guess what? It was sold on the last day of the month. Even though it didn't settle for a few days, the custodian might not reflect that because of some data error or because of lag in information. So, the portfolio that the custodian is showing could be slightly off from the portfolio the investment advisor is showing. So, the fund accountant will go in and just kind of tick and tie all that information and say, all right, is this valid? There's a small discrepancy in the market value between the investment advisor and custodian. Why? And they'll be, oh, well, the trade date. It traded on the last day of the month. The custodian didn't reflect it until, March 4th. This kind of stuff happens. Research trade failures, corporate actions, interest, dividends, or mistakes, right? So, it can be common to accidentally post a cash flow as a dividend when it was really interest, and vice versa. And obviously those are treated very differently, right? Trade failures. They research trade failures. What's a trade failure? The trade didn't go through. No big explanation there, right? Why didn't the trade go through? Could be a number of reasons, right? The trade could fail for a whole number of reasons. Maybe most common, I think this book says, the trade could fail because of, maybe someone didn't sign the form, or maybe there wasn't a date on it, or maybe they accidentally put the wrong year. As the new year begins, we write, the wrong year for a few days. I've done that before, right? Could be a variety of reasons. Update records for new activity. What kind of new activity? Maybe cash flows going into the account, cash flows going out of the account. As I describe this sounds fairly easy, and it sounds like you can fix all this stuff in 15 minutes. But when you're actually doing this work, it takes a lot longer. May provide the investment advisor with a daily cash amount. When I worked at State Street, we provide the investment advisor how much cash they had. How much cash is in their portfolio? Why is that important for the investment advisor, aka portfolio managers and traders? Why is it important for them to know how much cash is in their portfolio? They may want to invest it. Let's say 10% of their portfolio is cash. And they're like, whoa, 10% of our portfolio is cash. We don't want 10% in cash. We only want to maintain 3% cash levels. So what are we going to do? We're going to invest it into the market, right? Fund accounting costs between 0.4 and 2.7 basis points. That's irrelevant information. All I'm trying to say with that piece of information is that it's a very relatively, especially compared to investment advisory, very low cost portion of the business. Okay. Just more information here. I don't know why I don't have a title here, but update security and cash positions. They reconcile with the investment advisor and custodian. Research corporate actions. What are corporate actions? It's going to be a good future quiz question. Corporate actions. Stock splits, reverse stock splits, mergers. All right, all those are corporate actions. Now, when you think about it, that makes sense. Oh, stock split. You know, it's a corporate action, right? The corporation is taking an action. Merger, another corporate action, right? Resolve exceptions, make changes to the inventory of cash and securities, can offer services providing. You know what? I repeat the same information. Sorry about that, but again, reinforces what we should know. Great question, and I will promise you I'll ask this on not our next quiz, but our next quiz. The fund daily NAV must include fund expenses. So what it's saying there is that expenses for the fund are accrued on a daily basis. Why are fund expenses accrued on a daily basis instead of, let's say, at the end of the month?
Price is basically an expression of your expenses as well. Because if you don't put the expense in it every day, it's going to inflate the NAV.
You're right. Thank you. I didn't think you'd get it for a second, but you hit the nail on the head, right? So if, let's say we only included the fund expenses at the end of the month, right? If you sold at the end of the month, you'd be hammered with all the fees that occurred throughout the entire month, right? But if fund fees are accrued daily, guess what? You're spreading, as you should, you're spreading the fees out over the course of the month. So no matter who you are and when you sold, you're going to absorb some of those fees as well, right? Fund accounting, continued. At 4 p.m., you're determining at what price we are valuing the fund's holdings, value the portfolio, also accounting for non-security assets, divides the NAV by the number of shares to come up with the price of the fund. You know, a lot of this is done by the computer, right? And the computer will come back and say, something failed, something not looked right. What happens when a fund price is late? The price will not be published the next day, and it's embarrassing for the firm. Breaking the buck. Money market funds strive to maintain a daily NAV of $1. Not doing so is horrific for the fund. We've talked about this, I think, early on in the semester, Chapter 1 or Chapter 2, when we talked about money market funds. Managers will usually subsidize a fund before allowing it to drop below $1. Money market funds are supposed to consist of low-risk, short-term securities. I don't know why this was included in this chapter, but it was, so I included it in the slides. If I ask a question on this, we'll review it before we have the quiz, but this will mostly be a trivia-like question. Pricing. How are assets priced when they have not been traded? Okay, we've talked about this before. When is something not traded? Why would something not be traded? What? No?
No buyers.
No buyers, no sellers. It's illiquid. It's an illiquid security. Where might we see an illiquid security? One that does not sell or buy very often. You're right, a house, but that's not security.
Insurance?
What's that?
Insurance?
Insurance?
Yeah.
You're close. I'm looking for security, like a stock. What kind of stocks would not trade very often?
Emerging.
Emerging markets, right? Now, there's some emerging market stocks that trade just as often as U.S. stocks, right? And there's some U.S. stocks that don't trade very often either. So, to give you an example, if we were looking at the Vietnamese stock market and a small company in the Vietnamese stock market, that might not trade every day. But our, decision-making process might have said, hey, this is a good stock, we're going to buy it. But it still might not trade every day. If it doesn't trade every day, guess what? What's the price? Then we get into the idea of fair value pricing, right? How do we determine if we have the portfolio and the stock hasn't traded in 10 days? Do we just use the price that's 10 days old? No, that price would be considered stale, just like bread, right? It hasn't been bought or sold in 10 days, the price is stale. We have to kind of come up with what we believe is an accurate reflection of the stock price. Okay? And they do that through something called fair value pricing, where they take into account other things. Like, all right, well, what did the Vietnamese stock market do as a whole in the last 10 days? Did it go up? Did it go down? What about this industry and sector that this stock operates in? Did it go up? Did it go down? By what percent? And then we kind of implement that into the price of the stock. And we'll say, all right, well, if the industry and sector, all things being equal, went up by 1%, then maybe the fair value of the stock is that it went up by 1% in the last 10 days, since that's what the industry and sector in this country did in the last 10 days. Day in the life of a fund accountant, not really any quizzical material here, but series of checks and double checks, generally broken down into specialized group. No one group sees this entire process from beginning to end. Okay? Depending on the complexity of a fund, accountant can handle 1 to 4 funds. Innovations can increase this number. Hectic deadline-driven environment, like I said, 4:30, you need to start kicking butt. Generally considered an entry-level financial job. But as one of my buddies, has made it a career, he has now like 15 people working under him. So, his role in the fund accounting world is no longer an entry-level job. A mutual fund firm must be audited annually. Now we're talking about fund audit by an independent firm, right? So why do we have auditing occur? Prevent fraud. Assure everything's in line with regulation, right? Reassure investors. Was the information the firm provided accurate? Perform 5 tests in general. Investment income and realized gains, accruals and expenses, taxes, and shareholder equity. They also review the reports the fund issued, so they go back and they compare the fund's information we sent clients versus the actual information we have on record for the fund, make sure there's no discrepancies, make sure the firm abides by GAAP, which is what? Generally accepted accounting principles. Cost of an audit can reach over $50,000, which sounds like a lot of money to me and you, but when the fund holds, $150 million, $50,000 is kind of a drop in the bucket. Okay, fund legal support. What do they do? The legal department of the funds. Organization and registration of the funds. They handle all the kind of government stuff. Drafting and review of contracts. Ensure compliance. Interpretation of regulatory pronouncements. Right? So there could be some new regulation that comes across that says, hey, well, maybe your type of mutual fund can no longer invest in derivatives. They'll help with that information and relate it to the firm and make sure it's implemented. Prepare for SEC examinations. My firm right now is, I think, going through an SEC audit. Basically, the government comes in and just goes through your books. It's different than an audit by PwC, right? Similar, but different. An audit by PwC, or one of the major accounting firms, yeah, it's friendlier, right? They're going to go in and they're doing it as part of your business to the company and to former investors. It's kind of like you have to do it, so it's kind of friendly. not that the SEC investigation isn't friendly. It's kind of random. Like everyone gets investigated not investigated by the SEC, but audited by the SEC. Could happen once every 3 years, every 7 years. You go 10 years without one, but they do it randomly. Kind of like if anyone's ever here has been audited, right? Representation in the SEC or other legal proceedings if there are any. Homework. This is not the homework. So that's all I have for Chapter 7. It's 8:15, so you guys are getting out a little early tonight.